PEXA stands for Property Exchange Australia and is a digital property exchange and data insights business assisting lawyers, conveyancers and financial institutions to lodge documents with Land Registries and complete financial settlements electronically. Today, 89% of all property transfer settlements in Australia are processed on the PEXA platform. The company is expanding in the UK and has just released its first half results. Joining me is Group Managing Director and CEO Glenn King. Glenn, welcome to the Stock Network.
Well, thank you, and thank you for having me on the Stock Network.
Pleasure. Now, PEXA has seen its share price trend lower over the last 5 years, but has had a stronger start to this year. Also, a good response to its first half results. What factors do you think are now currently supporting the company and into this year as well?
Well, I think there are a number of factors that are supporting the company. The first thing is our execution of our strategy. Our PEXA Exchange business is performing well in Australia and now does approximately about 89% of property transactions across all Australia. Secondly, we're seeing some good traction with our PEXA digital growth business and the launch of our new valuation service, signing our first Tier 1 bank as a customer. And then thirdly, our expansion in the UK is starting to gain some traction. We're seeing now 12 financial institutions test with PEXA Pay, 2 financial institutions already live transacting. We've got 2 large financial institutions already working with us to go live towards middle of this year.
Great. Well, thank you for that. And when it comes to looking at your results, which you have just recently released, can you talk us through the highlights there and perhaps the key priorities heading into the remainder of the financial year?
Well, there are a number of financial highlights for the first half. And firstly, our group revenue was 163 million, which was 16% above the prior comparable period. We also saw that our group operating EBITDA was also up. We saw that around about 59 million, which was up 12% on the prior comparable period. Our PEXA Exchange revenue was up 11%. We also saw our margin, which demonstrates our efficiency in our performance. So our group margin was 36%, which was in line with expectations. And our PEXA Exchange margin was 55.4%, which is slightly above expectations. So it's certainly demonstrating strong financial discipline, performance and execution.
Great. And finally, Glenn, the outlook. What's your strategy for the year ahead? Upcoming catalysts as well that shareholders should be aware of or on the lookout for?
Well, certainly our strategy for the second half of this financial year is continually strong execution against our priorities. So what that means is ensuring that the PEXA Exchange maintains its strength in the Australian property sector. And that includes expanding into Tasmania, getting further growth in Western Australia and Queensland. We're certainly looking to continue our performance on the digital growth business, improving our financial performance, but growing our businesses such as Valuation Australia. And then thirdly, delivering on our UK business. And when I say delivering on our UK business, getting those 2 large financial institutions transacting towards the middle of this financial year. That's our key focus as a business towards the second half of this financial year.
Well, Glenn, thank you so much for talking us through the highlights and all the best for the growth and expansion plans ahead.
Thank you very much.